Ladies and gentlemen, good day and welcome to Shyam Metalics and Energy Limited earnings conference call organized by Orient Capital. Representing the management, we have with us Mr. Brij Bhushan Agarwal, Vice Chairman and Managing Director, Mr. Deepak Kumar Agarwal, Executive Director of Finance, and Mr. Pankaj Harlalka, Head of Investor Relations. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pankaj Harlalka. Thank you, and over to you, sir.
Thank you. Good evening to all. On behalf of Shyam Metalics, I'm delighted to welcome you all to this call, particularly our shareholders and our industry analysts. Thank you for taking the time out on this call to discuss the results for the fourth quarter and financial year 2022. Our results, including our presentation explaining the performance, has been uploaded on our website, and I hope many of you have had a chance to go through it. To discuss our results, we have with us our VC and MD, Mr. Brij Bhushan Agarwal, and our ED and Director of Finance, Mr. Deepak Kumar Agarwal. They'll take you through our results and answer any questions you may have. As always, this entire discussion will be covered by the Safe Harbor Clause, which is on page 2 of our presentation. Thank you, and over to you, sir.
Yeah, hi. Hi, Pankaj. A very good evening to all the participants, and thanking you for joining us on the call to discuss our fourth quarter and the year-ended financial year 2022 financials and business performance. The quarter began with the rise in the steel prices across the board, and then mid-February, the geopolitical tension between Russia and Ukraine started, which led to a panic situation initially. Things are yet to settle down completely, with the new world order finding its place in the Indian steel is to play an important role in the world steel market. Also, China being the largest player on the path of decarbonization has led to the further significance of Indian steel player increasing. The steel industry is going to play an internal role in enabling India achieve 5 trillion economy by 2025. The India steel industry has been growing anywhere between 5 to 7% year-on-year basis, and that's the growth rate might accelerate. We expect with the reasonably strong demand recovery on the back of the recent policy announcement made by the government towards the railways, roads, civil aviation, gas pipeline towards affordable housing, and incremental budgetary allocation to these sectors is likely to drive the demand for the long steel. The segment that we emerge as a leader in the consumption of this finished steel are construction, which accounts for 62%, followed by the capital goods 15% and auto 9%, intermediate product 6%, with consumer durable of 5% and railway 3%. Shyam Metalics is predominantly focused on selling long also steel, and this segment is part of the large and growth pie. We are glad to share the Q4 financials 2022, the value-added segment of TMT bar rods accounted for 40% of our quarter 4 revenue, which is significantly higher what we achieved in the first half of the current financial year, as well as much higher in comparison to what we achieved in the quarter 4 of the last financial year. We derive about 84% of the revenue from the domestic market and 16% from the exports. About 39% of our revenue are from B2C segments. Our initiative to drive B2C segment is bearing fruition. B2C segment accounted 45% of Q4 revenue, as against the average of 35% of the revenue of the past quarter. For those who are not well versed or familiar with our operation, we would like to draw your attention to our integrated operation across the value chain. The integrated nature of the production facilities result in the better control of our operations as well as enable us to improve operating margin, allowing us to focus more on the quality and created multiple points of sale across value chain. Our production facilities plants are strategically located in the close proximity to our raw material sources, which we believe lower our transportation costs and provide significant logistic advantage, thereby improving our operating margin in the terms of adversity, thereby reducing the impact of the contraction of the EBITDA margin. Even in times like the one at Q4, where the energy costs have accelerated, we had been able to hold on to our EBITDA margin and maintain the same. Even if we compare a sequential quarter basis, the decline has been very modest, with the range of quality structures products sold under the SEL brand. The company in the product market holds its pride in the place of leading steel manufacturer. Since we are O2 metal company, we are able to produce higher value long products in the efficient and the cost efficient manner. We are able to commission our state-of-art aluminum foil plant in Pakuria. The product as per the requirement of the esteemed customer are being processed and the acceptability and the response is very good. We do expect that the aluminum business itself shall have a significant contributor to the journey of the growth of the company. We had been declared as the acquired by the NCLT for Ramsarup 3 years back. However, there was a long-drawn legal tussle for last 3 years, which just concluded, and finally all issues have been set aside. And we shall initially taking control of Ramsarup soon. The same has been acquired through SS Natural and SPV between our company and Super Smelter Group, where we hold 60% through SSPN and our wholly owned subsidiary. Presently, an immediate overall outgo is approximately 380 crores, with our proportion roughly around 228 crores. Once we get the control and our team is ready with the entire plan on the same, we shall share with our shareholders the complete plan at that juncture. I am happy to point out that we have been able to grow in the volume in the terms of 33%. Again, I am repeating, last year we have grown in the volume in the terms of 33%, from 1.18 million ton to 1.56 million ton. In addition to the higher volume, we had been able to deliver better results, better realization by nearly 33%. Our performance was broad-based, with all the product segments doing well, be it pallets, billets, sponge, finished steel, long products, wire rod, TMT, structures, and varieties of specialty alloy and ferro products. Our company is blessed to have a very strong balance sheet, which allow us to take a better view and call during this time of disruption in the raw material prices. We have an inventory of 2 months of coal at our plant. The higher input cost is mostly to be recovered from the increased steel price in the month of April are coming down, but we expect the impact of the marginal effect in our performance. The company has identified operating levels like digitalization, operating excellence program based on the principle of Kaizen, 5S, Lean, TPM, and TQM to achieve its medium and long-term goals. We just upgraded our IT platform from ERP platform to SAP, ECC, and also committed to improve and deliver implementing PRO in order to upgrade the capability to mobility. The company engaged 2 operational excellence programs in its plant in Bengal and Odisha with BCG and Renault. The company is introducing best in the workflow practices in our work area. The company is committed to introduce higher level of real-time digitalization automations by increasing the various production lines. In January 22, the company has appointed an ESG consultant to undertake the diagnostic study to improve the material flow balances to review energy and water consumption. and the treatment of industrial waste. In addition to the ESG consultant would also focus in other aspects involving the social governance issue. They have submitted the initial report and phase 2 of the implementation is underway. Before I conclude, I want to assure you that we are from the management expect a strong demand to continue due to the current upcycle in the steel industry driven by the infrastructure spend, increased contributions from the recently added capacity, along with the product diversity and higher share of value-added product would drive the operating and the financial performance well into the next financial year. The only spoil spot has been an increase in the raw material prices. To sum up, the overall state to our core business continues to be strong. Most of our businesses are doing better than what we started in the beginning of the financial year. With that, I conclude my portion of the speech. Now I call upon Mr. Deepak Agarwal, Executive Director of Finance, to take up through the financial performance of the quarter under review for the financial year 22. Thank you so much.
Thank you, sir. A very good evening and warm welcome. We at Shyam family are thankful to you lending us your precious time. I trust you and your family is keeping in good health in the midst of unprecedented pandemic, which nevertheless has erased a bit in the past few months. Let me thank you all for the confidence reposed and support extended to the company that has further strengthened the pillar of the company and help us to progress ahead over the year. I am also glad to share the company has achieved another milestone recently with the acquisition of Ramsharup Industries Limited. Now I will give a quick review of the reported consolidated financials for the quarter under review and for the year ended of the last financial year, that is 21-22. On a consolidated basis, the company for the quarter 4 for financial year 2022 reported an operating revenue of rupees 2,857 crore, a growth of 22% over a quarter 4 of the financial year 2021. Like in the previous quarter, in the quarter 4 too, we have been able to sell higher percentage of volume sales of finished steel at higher realization, which has enabled the company to grow in terms of revenue and EBITDA. As a result, our EBITDA for the quarter 4 of the last financial year on a consolidated basis was at rupees 663 crore, growth of 6.7% over a quarter 4 of the last financial year, and a growth of 6% over the quarter 3 of the last financial year, that is 21-22. Just to drive on that point, if we measure the raw material cost to operating the revenue ratio in percentage term, it has been decreased by the 80 bps in a quarter 4 of the financial year 21-22 over the previous quarter. We have reported a flat EBITDA in a quarter 4 of the financial year 21-22 in comparison with the previous quarter. In order to maintain this quarter in EBITDA numbers, we have been judiciously and cautiously on all other cost components. For quarter 4 of the last financial year, that is 21-22, on a consolidated basis, we reported an EBITDA margin of 23.2%, a decrease of 105 bps over a previous quarter. Despite a challenging environment, in terms of blended EBITDA per ton, we achieved the 15,147 rupees per ton in quarter 4 of the financial year 21-22, a decrease of 17% over the quarter 4 of the last financial year, that is 2021. Please be informed that while calculating the blended EBITDA, the EBITDA of the company is divided by the steel volume sales to arrive at the blended EBITDA. We had both higher volume of pellet sale in quarter 4 of the last financial year, that is 2021, and also the realization were higher level as compared to quarter 4 of the last financial year, that is 21-22, which shows a decrease in the blended EBITDA. But in steel terms, the same has increased, driven by the changes to revenue mix and improvement to realization in most of our product segments and bringing costs wherever possible. There has been increase in the price to coal, pet coke and other raw material H for quarter 4 of the financial year 21-22 On year-on-year basis, we reported a consolidated net profit growth of 12% to 433 crore. And on quarter-to-quarter basis, the net profit was by a modest 1%. For the year ended 21-22, we reported a revenue of 10,394 crore, growth of 65% over the last year. Similarly, the EBITDA growth too has been strong at 87% to rupees 2,600 crore for the year ended 31st March 22. Over the last year, despite provisioning for taxation going up sharply, we reported a net profit growth of 104% for the year under the previous year. We could achieve this margin expansion owing to the exceptional market conditions, our steel volume growth, prudent capital allocation policy, and buying key raw material at the right time basis on experience. We also focus on improving the product mix, which led to improvement to the blended realization and concurrently improving the operational efficiency by cost optimization and rationalization of efforts, which enable us to report a very good and consistent set of operating profit and net profit. For many years, we have been following a prudent capital allocation policy by which 70% of our cash generated is invested back into the business and 20% is retained as a liquidity surplus and 10% is returned to the shareholder in the form of dividend. In the financial year 2021, for the entire year, we declared a dividend of per share of rupees 4.55 rupees, and for the current financial year, that is 21-22, we have already declared and distributed 4.5 rupees per share as a interim dividend. And on the back of strong operating and financial performance, and with the strong net cash flow from operating activity, the company yesterday in its board meeting further declared a final dividend per share of rupees 2.7 per share, amounting to an outgo of rupees 68.87 crore, subject to the approval of esteemed shareholders in the ensuing annual general meeting. We have achieved a good improvement to our working capital days. In the financial year 21-22, our working capital days is 44 days as against 69 days at the end of the financial year 2021. Similarly, we achieved a massive improvement to our capital efficiency during the first half, and the same trend is being perpetuated. Our return on capital employment or return on equity at the end of the financial year 21-22 are at 37.5% and 29.6% respectively, as against 25% and 23.2% respectively at the end of the last financial year, that is 2021. The gross debt to the equity, which was at 0.22x at the end of the last financial year, that is 2021, is now at 0.09x at the end of the previous year, that is 21-22. We had turned into a net cash in the first half of the financial year 21-22, and our net cash position at the end of this previous year, that is 21-22, is around 708 crores. From the cash flow statement, you can make out for the financial year 21-22, we incurred a capital expenditure of rupees 1,053 crore as against 361 crore in the financial year 2021. From the net cash flow from the operating activity of rupees 1,665.1 crore during the financial year 21-22. Our treasury has also been increased to the tune of 1,252 crore, of which available for the investment and cash equivalent during the financial year 21-22 was rupees 1,011 crore. I am glad to share the financial risk profile of the company is very, very strong. Our net operating cash flow from the operating activity to EBITDA is being hovering around 66% to 75%. Our business model is such that we always report consistent EBITDA margin by improving the product mix, generate cash flow to fund the capacity expansion. Our strategy has always been to incur capital expenditure in a smaller dosage in a piecemeal manner to ensure that the balance sheet is never stressed. At all points of time, we closely monitor the liquidity, solvency, and capital efficiency ratio. I would like to assure you that the company sustained a healthy financial risk profile despite pursuing sizable capital expenditure plan. Out of the 2,960 crore capex announced during the IPO, we have already cumulative incurred of rupees 1,529 crore up to the financial year 21-22, and the capitalized 894.26 crore assets during the last financial year. The remaining amount of rupees 1,430 crore shall be expended over the next two financial years, that is 22-23 and 23-24. We further announced a capex of 990 crore in March 2022 for expansion in pallet capacity, coke oven plant, and additional line of railway siding. This capex to be completed by September 2022-23. We spent 793 crore on capex this year, and for the next year, the capex additional spend will be 1100 crore to 1200 crore. The same is over and above the portion of 230 crore which is to be paid for the acquisition of Ram Swarup Industry Limited. Our company has taken an enabling resolution to raise up to the rupees 3,000 crore in the form of debt or equity or any other instrument. Our net worth at the end of the financial year 22 is 5,835 crore, and as a policy, we have never had debt equity reached to the extent of 0.5x to the total equity. The enabling resolution has been taken keeping in this in the background. At the company level, we have been able to grow through continuous expansion, but with a disciplined capital allocation approach and adherence to the principle laid out by our founding member of the organization. Added by the internal cash generation and sufficient liquidity surplus, which will ensure we take only limited debt in the event of any fund flow mismatch. I would like to assure you that the bank limit utilization at the consolidated level is expected to remain moderate going forward too. Also, the annual cash accrual should suffice for the capital expenditure requirements and debt repayment. Now I conclude my portion of the update and through the floor open for the question and answer. Thank you, everyone.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Amit Dixit from Edelweiss. Please go ahead.
Yeah, congratulations for a good set of numbers and thanks for the opportunity. So I have a couple of questions. The first one is on the rationale for acquiring Ram Swarup Industry. Now we are into a very similar business. We have our own capex, the brownfield capex as well. So and I understand this is an old matter. 3 years back we had bid for it. But how do you think it will integrate into your overall scheme of things? So just some color on that, the rationale, and how do you want to integrate it? That was the first question.
Yeah, hi, Amit. If you see in today's time, if you are getting a asset which has a railway siding, which has a land, which has a 132 kV high tension grid, we have an installed plant of a blast furnace, sponge iron plant, power plant, and at a so less price, which is peanuts. Like if you want to buy a land, you will not get a land at this price. And maybe if we take a land also, it takes maybe more than 2 years, 3 years to acquire this kind of a land. Logistically on the port area and very near to the iron ore, like, the freight cost in comparison with our existing plants, what we have, it is around 20 to 25% more on the advantageous position. So this is a very, very lucrative site with less of the hurdle. It is in the same terrain where we are working right now in Bengal, not a new geographical challenge. So this is one of the infrastructure advantage what we have been able to capitalize, from the acquisition side. Now from the business side, it has a world-class Tarale Spanish arc furnace. This is one of the, the most reputed vendor. So we have a lot of advantage in the time to come. Though I would say it is going to be a very, very different product in steel. It is not going to have any kind of competition or any kind of thing what we are doing in our existing steel plant. We need time because Ramsarup was one of the pioneer one time in the wire division. They have a complete wire division also. So in the time to come, though it is too early for me to comment anything right now on the business plan because, since we have been struggling for more than 3 years to acquire these assets, and now we have got the assets and now we are on the planning stage. But I can very well share that, this is going to be something different product from the company side. Like we have been always venturing into the new value-added products with the good technologies and all. So this project is also going to be in the similar line. Maybe we might think of getting into a specialty wire division, which has a huge potential, where more than 50% export is happening in the specialty wire. When we are talking of the nerd wire, or we are talking of the low carbon, or the chromium wires and all. So these are going to be the product, but still, it is under the planning stage. And just sharing my thought, what we are thinking right now, and we will take time because we have yet to get the position of this land, and then once we get the position of the land, the detailed evaluation will be done by the best consultant and advisors, and then we will come with the across business plan. But yes, definitely it will be more on the value addition side of the steel, and I don't see a very big capex coming up in this setup in next 1 or 2 years because it will take time to establish and do a lot of internal planning and all. And yes, this will be something very niche for the company.
Okay, thanks for this. The second question is essentially on volume growth. So, there are quite a few projects that are coming up in FY23, and besides this, there is a very attractive low carbon ferrochrome project also coming up, aluminium foil also. So it would be great if you could just share with us in percentage terms what kind of growth we can expect in each of these segments. I mean, the main ones, pellets, rolled products in particular, and sponge iron. If you could also share the possible EBITDA contribution that you see from the aluminium foil project and low carbon ferrochrome project.
Yeah, thank you. If we are talking of a low carbon ferrochrome project, like we just commissioned it, we had been able to stabilize it. It is one of the kind in the country with the process what we had followed. It is very interesting, and this is almost, I would say, 80% export. On an average, we can say that this business contributes around 40 to 50,000 rupees ton EBITDA in the low carbon space because it's a very niche technology, completely franchise from the international consultant and all. And as on date, like we are on the verge of stabilizing this 10 to 12,000 tons capacity plant every year, like per year. And we also have a plan to double it. Once we stabilize the plant, we regularize our market, we set up the team, we educate the team because it needs a lot of skill, effort in manufacturing on the technology front, also on the process front. So we will be able to double in next 1 year. From the foil plant is concerned, aluminum foil plant, this is also a very extremely interesting business. As you know, the packaging industry is growing, and the issue of the plastic is a great environmental and the health issue, which is to this planet. So this is also replacing very fastly in the niche packaging sector. Aluminium is coming as a very, very interesting packaging, and also a lot of other usage of the aluminium is there in the battery foils and all in the electric vehicle space. Since we are in the verge of stabilizing and we are learning more and more, as on date we would not like to increase any foil capacity for at least this year. We would like to learn this year more and more on the marketing front, more and more on the product front, and maybe when the time comes and we are extremely 1000% comfortable, we would like to draw the expansion in the aluminium space. Now related to the sponge iron long product, I would like to focus that in the long product, we are all aware that we have launched the brand ambassador Salman Khan as our brand ambassador, and we are more focusing on B2C sector now. And if you see, there is a good penetration this year in the long product space. So we expect that in this year we should be doing pretty decent volume in the long product, and I expect that we should be able to increase our market share and increase the production in the tune of around 35 to 40% in the long product business, because B2C is extremely interesting segment in the long product. Once you have a brand, you are able to create more value, and the sustainability factor is also extremely stable. So this is our plan, and since we are increasing our pellet capacity, and the sponge iron capacity is also adding up. So as of now, I can tell you it is going to be a little premature on my end to define anything on the sponge iron. But yes, whatever we have committed as on date on the sponge iron side, it is going to be more or less. We are going to have the same capacity and would like to wait for 1 year, because the company focus is more on the value addition, how we can add more value to the iron what we are making, how to integrate into the more realization, and see that more and more sustainability in the systems in the terms of better EBITDA, better margin, and the value-added product is there. Thank you.
Okay, great. Thanks for the elaborate answer. I will come back in the queue. Thank you, and all the best.
Thank you. The next question is from the line of Prashant Kumar Kota from Dolat Capital. Please go ahead.
Sir, good evening and thanks for the opportunity. So this is a follow-up from the previous question. If you could, I'm sure you have a business plan for the year. You could give the volumes across product, volume guidance, sir, on the product across products, ferrochrome, the aluminum foil, pellets, sponge iron, intermediaries, and finished steel. If you could give some broad, yes, I agree that the mix could vary a bit based on the market conditions and what you want to sell, etc. Broadly, the volume guidance will be helpful, sir.
See, in the terms of the sponge iron this year, we are going to add around close to around 0.4 lakh ton. This year we are going to add in the sponge iron. Pellet, we have committed that by September 23, we will be commissioning 2.4 million ton. But the way the project is going on, I'm very optimistic that we add out of 2.4. In one of the sites, we can add 1.2 million ton of pellet additional this year as well. Ferroalloy, it's more on the value of the on the low carbon ferrochrome. So this is going to add not a very substantial, because it's a very high value added product of 2.5 lakh rupees a ton. This is also going to add around 10,000 rupees a ton. 10,000 tons a year. And apart from the long product, I have very well specified, what we are planning to add around, say, between 0.4 to 0.5 lakh tons of long product we are going to add. And that's all, I think.
Okay, sir. Understood. Now, just coming to realizations of your brand. Now, you're tied up with your hired Mr. Salman Khan as a brand ambassador. So, the product realizations, when we compare to what Tata Steel does or Jindal Panther, etc., where are we now, sir?
There are different categories, but in every, it is very difficult.
Operator request has been initiated. If you'd like to cancel this request, please press *0 again.
Yeah, am I audible?
Yes, sir. Please go ahead.
Yeah, thank you. So, in every different region, the prices are different. But I would say, in comparison with Tata Steel, yes, we must be around 2,500 rupees per ton. The price must be, the difference must be that. But in comparison with the regular TMT manufacturers, our prices are around 3,000 to 4,000 rupees, net of all the the marketing expense and all the, lot of schemes are there in the network area. So our realization is better.
Mr. Prashant Kota, are you done with your question? Hello? Mr. Prashant Kumar Kota? As there's no response from the current participant, we'll move on to the next. That is on the line of Pratin Roy from B&K Securities. Please go ahead.
Side and congratulations on the very good
sorry to interrupt, Mr. Pratin Roy. We lost the audio from your end.
Hello, I'm audible?
Yes, sir. Please go ahead.
Yeah. Congratulations, sir, for the good set of numbers. I have only one question. Right now that globally the metal prices are seeing some correction. So if this correction continues, means how far it can go and how much it is sustainable for the margin front? Means whether we can maintain the margin with what we have reported in this quarter, or what we can expect downside risks on the margin, if you can throw some light on that part.
Today, if you ask me, we are in a very, very extreme, conditions. Like nobody knows about the geopolitical issues which is happening around,
Okay.
There is a disruption everywhere. But when we see from these kind of core industry, we have to look on the, annual side. Like you remember last year we had we had gone through a very tough pandemic year. Last second quarter and everything was in the shocko condition. But still, in spite of that, we revived at the third quarter, fourth quarter. So these are all temporary phase. It will not be appropriate from my end to predict anything, but yes, as Shyam Metalics, we all know that we are on the bed of the raw material. We are very comfortable. Our market is within 500 kilometers. We sell more than 80%. We have a decent amount of an export businesses also to hedge and de-risk our portfolio. And we are like a FMCG company in metal. None of the company, we can say that he is like Shyam Metalics. We are in pallets, we are in sponge, we are in billets, we sell wire rods, we sell TMT, we sell structures, we are in aluminium, we are into a specialty steel product, we are in ferroalloy. So this is the most, this time model, if I see from any of the metal company, it's not just like one product that we are dependent on the imported coke, which is going to come from Australia, and and it is so volatile. So we have a lot of advantage. But yes, from the business point of view, from the market point of view, we are all governed by the demand and supply, and with the kind of inflation which is going up, we all know that the things are slowing down. But it is a part of a business. Like we can't always compare one quarter or 1.5 quarter. We have to see throughout the year. But from the sustainability point of view, I don't see there is a big challenge. Might be there is some little bit of squeeze in the margin, which happens in every industry. But in comparison with the peers or in any metal space, if you see, the advantage what we have, very rare, or maybe, I think we are only the one which has such a good advantage.
We can assume that the spread will be maintained in the near term, right?
Sorry?
We can assume that the spread will be maintained in the near term. So maybe one quarter there is some downside is possible.
Yeah, 100%. Because you are increasing your capacity, you are optimizing your cost. A lot of other value is also going to be added. But yes, I improve. I feel that yes, there will be a decent amount of spread. And since we are into a pandemic situation, we don't know. Maybe we come across with a different geopolitical issues, or maybe some China issues and all which is happening. Otherwise, things doesn't look bad.
Okay, sir. Thank you, sir. I will come back to you.
Thank you. We'll move on to the next question. That is from the line of Arijit Datta from Kotak Mutual Fund. Please go ahead.
Hi, sir. Thank you for the opportunity. I have a few questions. Operator, if you feel that I'm exceeding the time, stop me anything. The first question, sir, on the Ramswal acquisition. So we are spending almost like 400 crore as the initial acquisition cost. Although you have said that 1-2 years there will be no big capex coming in, but in order to make the plant up and running, including working capital, including the capex that we'll be putting it, what additional cost that we can envisage as of now? Not any expansion, just to make the plant restart, because I believe the plant was shut for many years. That's the first question.
See, Arijit, this was a plant which was being done by Mekon, and yes, the plant has been closed for a pretty long time. I think it was more than 7-8 years the plant was under shutdown. So we need to do all the repairs and all. But I don't think the capex is going to be very large, because first focus of the organization will be to resume the operation, by doing the modifications and all. But hardly, I think so. If we talk, maybe, if we at all do all the due diligence and everything, it's not going to be on a very large cost. But, it is too preliminary for me at this point of time to comment, because, we just got the letter from the NCLT and we have not sent our engineers to see. But while 3.5 years before, when we evaluated, we just emphasized that it should be around 200 crores, will be spent on the repairs and uplifting the complete, some modifications and all. So that is also, was a very, very initial figure, which will be going in further detail and doing some cuts and cross. So it's not a major cost, very small cost.
200 repairs, and should we take around 200 more for working capital?
It's just, the thought process, what we did 3.5 years before. So maybe, 200 crores. It will not be appropriate
Another
for
200.
me to, I'm just, on the assumption I'm saying, you can't say that, it may be 300 crores or it may be 150 crores, but it will take time. We need to do a proper due diligence with our technical consultant, teams and all. Then only I will be able to share all the data.
Makes sense. Thank you, sir. The second question is on the cost. FY21, FY22, we were just amazing in terms of how you anticipated the cost rise and you took a lot of inventory, both in iron ore and coal. This quarter, we already started seeing sign of increase in that. But since we have the old inventory and the current prices, the gap is huge. Do you see next quarter, I mean, starting from this quarter, Q1, Q2, do you want to say that the cost increase will be a bit sharp because we are replenishing the old inventory and the current inventory will be high? I mean, if the benefit that we got in last 2 years will be reversing in a steep way kind of thing. If you can separate coal and iron, that would be even helpful.
So definitely, there will be because at this point of time, you are right, there will be some changes and we are also predicting that key. But the market has to also absorb it, because the things can't remain like this. We are at a very, very geopolitical crisis situation, so things have to resume. And the best of the advantage what our company enjoy is that we are not based on the coking coal. We are based on the non-coking coal. And we are on the coal bed. So I think maybe, one quarter or maybe 1.5 quarter, maybe some kind of a little pressure is there or could be there, But I don't see that it will have any mid-term or long-term effect. Things have to resume and fall in the place where it has to, it was operating.
Sir, I do appreciate the mid-term and long-term guidance, but if you can be bit more details in the current quarter and the next quarter number. For example, what was the coal and the iron ore cost in Q4 and what is building up now, because we must be having the inventory. So what number, for example, last quarter, say around 7,000 was the coal cost. This quarter, we think around 9,000 will be the coal cost. Something like that. What data we can see. A bit more specific will be really helpful.
I think, I will be not in a very practical situation to share this thing right now with you because, things are changing every day and we are sitting on the inventory and all. But yes, the price is going to change. So maybe, I'll ask my office to make a note and then we can share it or we can again have a con call because I don't want to comment anything which I'm not very 100% sure at this point of time. But from the trend point of view, yes, coal is not going to go further up. That is, I can assure you because the coal has gone up because of the huge crisis of energy. Number one, there was a disruption in the supply from the international market like Indonesia and other countries and all because of various reasons. So a lot of coal from the coal belt was going to be on the part of the power plant. So there had been panic in the market where the prices have gone up. But now, since because of the so much heat and summer, the energy demand has gone up. So that was one of the reasons. But now, since the monsoon is going to be next month and a lot of hydro projects are going to be active, and the heat is also going to be settled. So a lot of demand on the energy front is also going to come down. So if you see the IX prices, what it was floundering between 17, 18 rupees, a unit has come down to around an average of 7 to 8 rupees or maybe 9 rupees at times. So the trend is going to come down. So it's coming down. So the prices of the coal definitely is not going to go further up. It's going to, rather, it will be it will come down. And where we are talking of the iron ore prices, if you see the iron ore prices which was there in the last quarter and now the iron ore prices correction has already happened 30%. So the prices in the iron ore is also going to go down further because the pressure of the coal is coming on the iron ore. And because of, the Brazil Rio Tinto mines and all which has become very operational, resumed and all, and other mines have also opened. I don't see a very big, pressure from the iron ore front on the price is concerned.
Perfect. So, thanks. We'll wait for further details. As you said, we'll get back. But just one clarification, you mentioned that coal not going further up. Does it mean the coal prices in the market or our coal cost? I mean, due to the inventory.
No, I'm talking about the market,
right?
Our coal cost, I said, I will be able to only...
right. Understood.
Yeah, I'm talking about the general perception. I'm not sitting with 100% data, and I don't want to comment anything which is not, so it's rational. So that is one of the reasons, So maybe next time if you can send me a questionnaire before, I would love to make it more. But very intellectual question. I appreciate, Arijit. I appreciate.
Done.
Thank you.
Done.
Thank you, dear.
Third question, if I can may. Operator, can I ask two more questions?
Sir, you may please proceed.
Yeah, thank you. On the retail venture, now you're focusing on B2C. So my experience when I go to East, when we travel, first we see the political hoardings, and after that, if I can see any hoarding, that is the steel sector hoarding. I mean, in number of brand, everybody is endorsed by some of the other biggies, be it top film stars or be it top cricketers. Every brand has some or the other. In this overcrowded market, we are going to set a new team, spending on advertisement, although another big star is added to that list, Salman Khan of ours. Do you see that it may end up, like more competition and without much reward? And then another problem we have that we have a brand which is also named Shyam. Although we sell at ACL and the Tiger, as I saw in the presentation, but there can be a brand confusion also. So some thought on it. How much you are confident about the retail venturing? Because we did wonderfully well targeting the B2B segment.
Shyam Metalics today is a conglomerate, number one. And I don't want to discuss about the second brand and the size of the other company. Now, we are forgetting one thing that today the demand in the steel is growing around 6 to 7% every year. And the major development which is happening in our country is in the rural economy. The market is increasing. The demand is increasing. Yes, there is a challenge. It's not easy to develop a brand, establish a network market and all, but we are also a very, very old brand and very, very settled and established company from the prospect of the cost, from the trust point of view and from the brand point of view. We just need to penetrate a little more harder. I would say that we are not a company which is coming into a new space. We are not doing any greenfield expansion, rather we are doing all brownfield expansion in the brand activity. So yes, there has to be a cost and there is a cost also, but it is not that substantial like, you have to set up everything and that kind of gestation time is going to, is going to be some kind of a disadvantage for your company and all. But yes, it takes time. Today, whether you sell, color sheet or you sell anything in the Indian market, if it is not a techie or, there is a competition everywhere. The advantage what we enjoy is a trust. Today we are a very well-established company, the company with the highest trust and the good reputation, best product, or maybe one of the best product, So it takes time, but today we are selling, you are seeing the result. We are selling in the same market, the result is in front of you. You are seeing what kind of an advantage what you have in your company. You have your own railway siding, you are selling everything within 400, 500 kilometers from your plant. You make the steel from the iron fine, you have your own captive power plants. So, you have your own specialty alloy to add in the steel. So many advantages there which is helping us to reduce the cost. and selling the material at a higher price under the brand value, under the network value. So, it's okay. I don't see any kind of a challenge. And today we have hired PwC, for the further enrichment in the branding activity. All the best consultants like BCG and Renault, they are the part of our excellence program. So many things are happening. Actually, today we have never stated that till now, like any time, like we have cut down the production because of the constraint of any raw material or any kind of a constraint on the demand side and all. I have really no concern on this. And since the market is growing, we are very geographically, we are very well located plant. We are in the pan-India market. It's not that we are only on the one market. You have an export revenue. So many things are, you're exporting your steel. It's so much mix of the, the advantage is there. I don't see. And brand cost is a very, 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 very low cost, in the overall balance sheet, what we are spending. And to grow in the time to come, it's not the luxury, but it's the necessity. That once we are targeting to be the world-class player, in the steel sector, we need to have everything world-class. So we have to have a world-class brand ambassador, the world-class product, and the rest of the, team to work with us. Thank you.
Okay. On the enabling resolution.
Sorry to interrupt, Mr. Datta. May we request that you return to the question queue? There are participants waiting for their turn.
Thank you. Thank you.
Thank you. The next question is from the line of Amit Dixit from Edelweiss. Please go ahead.
Yeah, hi. Thanks for taking my question again. I have a question on working capital. If we see end of the year, inventory has almost doubled. Payables have also gone up. Although on receivable side, if you look at receivable days, they have gone down significantly. So I just wanted to understand the key drivers of this, whether it is coal cost or, why has inventory doubled, and it is supported by payables also. So how do we see working capital going ahead? That is the first question.
Can I ask Deepak to reply on this?
Yes,
if you allow me, Amit.
Sure, sir.
Thank you, Amit.
I know how to make steel, boss, financials and all. Let the financial people also share with me. Yeah? Please, Deepak.
If you see in our financials, our inventory level is increased from 1,000 crore to 2,000 crore. This is mainly because of creating the inventory more. As you all aware that in the last year financial, when there was a COVID scenario is there, so we are keeping our inventory level is very low. But in this current financial year, we are enhancing our inventory level to some extent from the last year, and also the price of input is higher. That's why our inventory from the last year is higher. Second one, as far as working capital is concerned, we are always maintaining our working capital within the range of 50% of our average utilization. We will be definitely keeping this side for going forward.
And payable days are also up. So have you negotiated better terms in your payable?
Yeah. As far as sundry creditor for capital goods is concerned, around 1,193 crore. Out of these 1,193 crore, 857 crore is basically the LC payment, which is accepted LC against the procurement of coal and manganese ore, and which will be paid over a period of time.
857 crore.
Yeah, 857 crore on account of coal and manganese ore.
Okay, fair enough. The second question is essentially you touched on the the split of cash, that is 75% for growth capex, 15% as retained earnings, and the rest as dividend. Now, sorry, we are already a cash-rich company, and going ahead, from whatever volume growth you have mentioned and the new avenues of growth, your cash flow will only increase. And our capex, as we mentioned, 1,100 crores to 1,200 crores, maybe for a couple of years more. So your cash balance will keep on increasing. Now, what are you going to do with that? Will it be enhanced returns to shareholders beyond 10% we can see? Or will it be, some more inorganic acquisitions like value creative acquisitions like Ram Sarup Industries?
Amit, like we have done an acquisition in Ram Sarup, lot of, expansion is already has been earmarked, which is going on. And lot of other modification plans and other, upgradations plans are also in the pipeline, which we have not shared now. I think we would like to add more value in the company to enhance the greater value to the shareholder. But yes, from the dividend point of view, last year I think we did around 10.75% of the total, net profit what we generated. So maybe, in the time to come, see the expansion plans, if it is the need of the company, we would like to invest more, but we will not like to go below what we had promised. And if we see that there is no major expansion plan coming up, and there's a lot of capital which is getting accumulated, definitely we would like to share this thing with our shareholders.
Okay, great, sir. That was very helpful. Thanks and all the best.
Thank you. The next question is on the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. I think while we appreciate that you can't share the coal cost, maybe if you can share the procurement that you are doing right now. I mean, how much import you are doing and how much is Coal India sort of supplying on a quarterly basis or on a monthly basis. I think some numbers on that would be greatly helpful. How was Q4 and how does Q1 look like in terms of volumes of coal that you are procuring and how much of that volume Coal India is supplying and how much you have to import right now. If you can tell that. And secondly, just to clarify on the payout, what we understood is that as a percentage payout of 10-11%, that is the base level payout that we will see. And it will increase if cash, FCF increases, FCF post capex increases, post growth capex increases. So these are the two questions.
Presently, there has been a very different situation because of the energy sector movement of all the coal from the subsidiaries to the power plants and all. But yes, on an average, I can tell you around 40%, 35 to 40%, we are importing coal to meet out our requirement, because all the government sectors right now are focusing the coal to the powerhouses, which is going to be resumed, as I rightly said. And related to the dividend also, I have very clearly specified, like we did an EBITDA of around 17, PAT of around 24 crores this year. Correct, Deepak, if I'm not mistaken?
Yes, yes.
And the payout was around 186 odd crores, right? If it is correct. So, if the time comes and if we see there is no major expansion happening in the company and we have enough cash, definitely we would love to increase more dividend payout. But all depends on the need of the cash for the expansion, for the growth of the company. But yes, as a good governance and participation of our respective dear shareholders and expectation, we would like to be very confined that we are going to be always a dividend paying company, and whatever we have shared our thought earlier in the terms of the capital allocation, the dividend is one of the part. We are going to be very much within the discussion what we had.
Yeah. Great. Just to understand this 35 to 40% import, it was there in Q4 also, or in Q4 it was lower? Of coal, I meant.
It was a little lower.
Yeah.
It was a little lower.
Okay.
It was a little lower.
Okay. Okay, understood. And just to understand one last thing, there are two types of coal which are available. One is a $150 coal from Russia, and the rest is the $300 coal from $400 coal from Indonesia and the rest of the world. So, is the mix being matched by these two sources, or we are sort of only looking at that $400 coal while importing?
No, we have not imported any $300 coal. Our import of the coal has been in the level of around $220 to $230. We have not tried Russian now because there were a lot of issues happening with the Russian coal because of the quality and all, which has not actually been established. But yes, we are going to take a trial of that material very recently, and then we will like to enter into a Russian coal.
Okay, got it. So if that happens, probably some relief can come through. Okay, got it. That's all from my side. Thanks.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar sir, and thank you for all the clarification. Sir, if you could just dwell slightly on the structure of the deal for Ram Sarup. Why was it structured in through the subsidiary route and part? What is the advantage of going in the format and not directly from the parent company itself?
This transaction, this expression of interest was given 3.5 years before, before the IPO.
Okay.
And there was that time, seeing the market situations and all, there were a lot of concerns on the issue of the projects and all. So that was something which was strategized 3.5 years before, and which was under the legal litigation, and which we got the award just last week. It is under a company, under an SPV, Shyam. So for this, we had a partner. We have a consortium partner who holds 40% and Shyam Metalics holds 60%. And so an SPV company was formed. And for that, the investment also was, like we don't have to invest so much money, and some advantage also we technically also enjoy with the other consortium partner in some special field. So that was one of the reason, and also to avoid too much of competition and to avoid the maximization of value. That was also one of the strategies which we planned 3.5 years before. but हमने जो प्राइस 3.5 साल पहले दिया था हमें आज वो मिला है. The asset prices have gone 3x. We all know. So that was one of the reasons. Nothing.
And sir, currently हमारे utilization levels क्या हैं across the product portfolio? What have been our utilization levels for the last quarter and for the year as a whole?
Average we are maintaining around between 85 to 90%.
Okay, and this is what we are also post the exit of the March quarter also. I mean, generally sir, before the monsoon, the demand peaks up and then there is a languish period because of the onset of monsoon. So
average बता रहा हूँ last year का भाई.
जी सर.
तो बहुत सारे plants हैं ना. I will not be able to spell you right now each and every plant.
Correct sir. मैं blended ही पूछ रहा हूँ. I was just looking for this.
ये खाली average of the year बता रहा हूँ.
ठीक है सर. And post March average utilization.
Mr. Saket Kapoor, may we request that you return to the question queue? There are participants waiting for their turn.
But sir was just answering to my question. If you allow, then I can complete.
Okay.
हाँ बोलिए साथी.
Yes sir. So the point was post the exit of the March quarter. Generally, it is found that before the onset of monsoon, the demand is on the higher side. But because of this raw material fluctuations and other factors, there is some weakening of demand that is currently in the system. So if you could throw some more light on the current steel market and the products currently which of our product portfolio.
See, till April, the market was behaving very, very nicely. Everything was on the peak. But from last 15 days, there has been some slowdown. There has been, if you see the price have slide in last 15 days only, majorly if you see. Because of the high inflation and, there's a lot of concern on the cost side is concerned. So, all the contractors and all, they had some issues that till March they have to complete the project. So they have done this. Maybe they are waiting for some kind of a correction.
Okay. So there's a significant slacking of demand that we are observing for this month?
Yeah. There is some slowdown in the demand. No, 100%. Yeah.
Okay. And last point, sir, is for forward integration, are we looking for DIP also? DIP pipe, I saw it in your annual report, the presentation and all. So for forward integration part,
small investment was planned of around 200 crores in 24-25.
Okay, so we are progressing in that sense.
Yeah.
Okay.
We have a plan and we'll be going for that. But we have time now. We have not yet started because we need to complete this after our blast furnace production. So, but yes, definitely 24-25 we have a DI plan.
24-25, so that's a long way as of now.
Long.
Okay.
And very small capital outlay is there.
Okay, then what is the objective of going for it, sir? If it is a small plant and it's still 2-3 years down the line.
This plant is small. For us, it is a very low capex because we are already putting up a blast furnace center. Everything is there, coke oven and all. So we just need to put a downstream facility.
Right.
It was not a very major capex, rather for our extra iron making, whatever we could convert as a value addition was a strategy putting up on planning this DI plant. Yeah.
What is the nameplate capacity?
Sorry to interrupt, Mr. Saket.
Yes, sir, you answer. I'll come on this. Nameplate capacity.
Sorry?
What was the nameplate? What is the capacity we are emphasizing for the DIP?
It was around 2 lakh tons.
Okay, sir. Thank you for the reply. No, sir.
Yeah.
Thank you. We'll move on to the next question. That is on the line of Amarjeet Singh from Oculus Capital. Please go ahead.
Sir, am I audible?
Hello,
sir, am I audible? Yeah. Sir, I just wanted to check on the acquisition. Our 40% partner, have we engaged in any dialogue on the quantum that they are willing to infuse, or has anything changed for them in the last 3.5 years?
No, it is all what we decided before.
Okay, so they are still on board within the project completely,
Yeah,
right?
very much. And they have also invested money, like out of the total some odd 380 crores or 360 crores, they have invested their proportion of 40%.
Okay, thanks.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Nachiket Kale, Orient Capital, for his closing comments. Mr. Nachiket Kale, please proceed.
Yeah, hi. Thanks everybody. Thanks for participating on this call. We really like to thank the management again for sparing the time and all the investors and analysts for the interactive session and all the interesting questions. For any other queries, please feel free to get in touch with us. And we are also planning a plant visit to explore and understand the state-of-the-art manufacturing facilities of the company, so we can further discuss that separately. So once again, I'd like to thank the management and all participants on the call. Have a nice day.
Thank you, everyone.
Thank you so much. Yeah, okay.
Thank you. Ladies and gentlemen, on behalf of Shyam Metalics and Energy Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.